Singapore tonight. Let's go over to Sarah Alcaldi, who has the business headlines. Sarah, Singapore Airlines doing another 180.
Well, John, the national carrier has ditched the auto inclusion of travel insurance on its website after negative feedback from its customers. The online booking feature was introduced last year, and it automatically includes travel insurance unless customers click to opt out.
If you'd recently bought tickets on Singapore Airlines website, only to discover that you'd also bought travel insurance you didn't want or need, you might be glad to know that this won't be the case the next time you make a booking on their website.
Customers have a very fine sense of fairness perceptions. That fairness may be a bit biased, a bit jaundiced, because they're viewed from their point of view. But if they feel they were being taken advantage of or something wasn't quite fair or obvious, they will react very, very negatively. So to have an opt-out insurance that is not clearly labeled as such, or which many customers didn't quite see, just makes them upset.
This example from mylion.com shows exactly how the opt-out feature worked. A flight from Singapore to Seoul here costs $1,788.70. You then go on to fill in your details and select your seats. But by the time you get to the final payment screen, the price has gone up to $1,816.70. As you scroll down, the site's add-on screen shows that travel insurance has been automatically included for your convenience. The Remove button, however, is gray, implying that it is not clickable instead of blue, which will encourage clicking. It is only when you click on More Details on the final payment screen that you would be able to see that travel insurance had been added to your booking. The airline says that it removed the auto-inclusion of travel insurance on its website on January 30th after taking customer feedback into account, and that it's amended the booking flow of its website to offer travel insurance as an opt-in rather than an opt-out feature.
I think the intention was good, but as we all know, the road to hell is paved with good intentions. In this case, I think SQ made a mistake. A better way would be like some American carriers, they have a pop-up that grabs your attention and tells you insurance is included. Are you okay? Yes or no? Or they have a big red box surrounding the insurance like British Airways does, and they tell you if you want insurance, click yes. It's auto-selected as no for you, right? So I think in this case, it was good intent, but not so well executed.
While an opt-in policy is common among many budget carriers, some experts say Singapore Airlines, which has built a reputation for itself as a premium legacy carrier, should not be engaging in such tactics.
Theirs over the decades has been dedicated to building a premium image. When you introduce pricing mechanisms like this that in effect erode some of that image, there's absolutely the potential to damage the brand. In this case, however, because the airline went in and unwound some of this after they introduced it, they fixed it pretty quickly. So I think the long-term impact is negligible, but for the short term, they put a little dent in their reputation with customers. But as long as they adhere to their premium positioning in the marketplace, they'll be fine.
It's the second time in as many months that the airline has irked customers. Earlier this year, it announced that it would charge a credit card service fee for flights departing from Singapore, before U-turning on its decision following criticism from customers.
Well, there's now more help.